The views and opinions expressed on this program are not necessarily those of this station, JVC Broadcasting Management, or its sponsors.
With so many people living longer, the fear of outliving your money becomes a reality for many of us. Will I be a financial burden? Will I outlive my money? How will I be remembered? My name is Neil Himmelstein, president of Main Street Planning Group. Please contact me by visiting mainstreetplanninggroup.com. That's mainstreetplanninggroup.com, or call 631-647-4694. I will introduce you to strategies that will guarantee you will not outlive your money, that can guarantee you will not be a burden on your loved ones. Through a collaborative approach, we will uncover solutions that offer tax-efficient strategies, lifetime income, and legacy planning, choice, organization, direction, and education. That is the code we stand behind. Contact mainstreetplanninggroup.com. That's mainstreetplanninggroup.com, or call 631-647-4694. And listen to me every Friday at 3 p.m. as I host the Main Street Code for Financial Success, right here on 103.9 LI News Radio. Good afternoon. Welcome to the Main Street Code for Financial Success. I'm your host, Neil Himmelstein. And when we talk about our code, we talk about choice, organization, direction, and education. And we help hundreds of advisors across the United States in the areas of life insurance, annuities, disability, long-term care, life settlements. And we get engaged with many other financial professionals when it comes to estate planning or personal retirement planning. These are all intertwined, and you need a team of professionals to help you, and I like to help quarterback that team if you don't have any. I think it's essential. I see things all the time where someone will go to an estate attorney and they'll set up a trust, but they won't put their policies inside a trust, or they won't follow through with the trust, and all kinds of things. So sometimes I can pick up some things that may be lacking, or, you want everybody to work in the same direction for you. So you want to make sure your plans are airtight, because you never know when something happens. Anyhow, recap of the week. It's been insanely busy. I had a wonderful meeting with the Farm Bureau of Long Island. The Farm Bureau is a huge component. I'm a big advocate of them. They're like a lobbying group for the farms and the agricultural community, which is a major economic force on Long Island that you don't think about that often. But when you think about the food we eat, the wines, all the wonderful things that they're doing, and not only that, the environment and our health, it all intertwines, and agriculture is the main driving engine, not necessarily oil. We all think of oil. Oh, the oil price is up. Yeah, we all are loading our gas tanks and saying, oh my God, this is the main driving engine in our lives. But really what we eat, how food gets delivered, how the air is, how the land is, how the environment is, all contributes, and they're engaged in all of these things. Even the Iran conflict and everything else, that fertilizer is being restricted. That's going to impact everybody, because when they run out of fertilizer, or it becomes cost prohibitive, pricing of all these other things, particularly food, is going to go skyrocket. It really hasn't hit yet, but as fertilizer dries up, it's one of the things we may not be thinking about. Our food supply may dry up. Think about that. No fertilizer, no food. So they get involved in a lot of issues. They get in a lot of labor issues. They have a lot of seasonal help and part-time help. Please support your Farm Bureau. And more importantly, I was at another meeting this week where somebody had just come back from Croatia. Another one was talking about a vacation in Portugal, and they're going here and they're going there. We have one of the most beautiful islands in the world. And with the price of gas and everything else, visit your local farms. What a beautiful Long Island, the wineries and the wine tours and the family stuff that they're doing now with, hay rides, and not just traditional, and mini golf, and There's so much excitement. There's so much going on Long Island that think about, maybe I don't have to get on an airplane and go somewhere else to have a good time with my family. Think about Long Island. What a great place we live in. Yes, it's expensive, but we have tremendous, tremendous resources. If you're just stuck in your home all day and, I got to go to some Caribbean island, you have beautiful beaches here. You have so many resources here. You just got to look. So that's my thing. On some other topics I wanted to talk about today that I'm seeing a lot of activity on is people that have bought life insurance policies at an early age and have done some great planning. And now they've built up a lot of money. Now they're thinking about, well, what's my real concern today? Well, my real concern today might be long-term care, but how am I going to pay for it? So a lot of people are taking their whole life that they built up, their year's savings, and now they haven't addressed really long-term care, and they're exchanging that money for a long-term care policy, whether it be, a lump sum payment so that their long-term care needs are met for the future. And you can do that without losing access to those funds. It's a big deal. Okay, you know what? My life has changed. I bought this policy in my 20s or 30s. I've built up significant cash in it with the intent of maybe I might need it for retirement, but I'm doing well. So my needs have really changed. I now have to address long-term care, which is, by the way, I've talked about it endlessly on the show because it is such a crisis today. The biggest crisis we face as we get older is that need for long-term care, because we have such a longevity risk today that we are living longer. We can live to 100 and 110 and 120. And in addition, we are seeing, in some cases, critical situations much younger. It's like both things are happening simultaneously because of the environment and other factors that we're seeing a lot of. I can't tell you, I know 2 young people this week that I know of. One's a 31-year-old, the daughter of a friend of mine who had a mini stroke, and they found out she had a hole in her heart, 2 young kids. The other is a 42-year-old associate of my son's who had a heart attack 2 nights ago. 42 years old woman, and dangerous situation. Didn't know where it came from. So things can happen. Things do happen. You have to prepare. Long-term care is one of those things that if you do make it to 60, 65, 70, the likelihood of you needing care in your home or in a facility, the odds go up the older you get, but you have to prepare for it younger when you're healthier, but your odds continually go up that you will need some sort of care, because it'll tells you on your health insurance, on your Medicare, they do not cover care in your home or facility. So the only way the government is going to help you with care in your home or a facility is if you impoverish yourself and go on Medicaid. That's the only way. You have to be impoverished to get this thing called Medicaid. And many attorneys, estate attorneys, elder law attorneys, try and show you ways to get to impoverish yourself or lose control of your assets in order to get this government plan, which, by the way, they're cutting money for. And the government decides if you do get Medicaid, which is a process. It's a big process. If you need it, it could take 6 or 9 months in filling out paperwork, and you got this huge look-back period. If you listen to any of my shows and any of the attorneys, you've got this look-back period where they look at any transfers and everything else, and they can claw back, and the costs are tremendous, and the emotional effect of you needing care is tremendous. When you're talking $500 a day, $15,000 a month, eating away until you get to this Medicaid thing, until you run out of money, and then the government decides where to put you and what type of care you're going to get while cutting Medicaid. And that's the number one provider of long-term care. So you can do it yourself by insuring. And one of the ways to self-insure is look at whether you have annuities you've bought or life insurance, transferring that money to a long-term care cash policy. And guess what? Any money that comes out of that policy is going to come out tax-free. So it's a great tax move as well. You're listening to the Main Street Code for Financial Success. We'll be back right after a minute. If you want to get a hold of me, the best way is 631-647-4694. That's 631-647-4694. Or visit me at themainstreetcode.com, and we'll be right back. Welcome back to the Main Street Code for Financial Success. I'm your host, Neil Himmelstein, and before the break, we talked about taking care of your long-term care with some of your older assets. And previously, we talked about the Farm Bureau and how wonderful it is. And now I want to talk about another situation that has come about. So one of the things about life insurance and annuities that people may know or may not is they pass outside your will and outside any trust. So the beneficiary designations go directly by the life insurance contract. So whether you go through an attorney or you go through anything else, it goes by contract. So whoever sold you these policies hopefully can help you claim that benefit down the road, or your spouse or your children. And a lot of people will, let's say, do the right thing and they want to leave money to grandchildren, which is great. So we have a situation where a lot of money was left to multiple grandchildren. So annuities and whatnot are left to grandchildren. One of the things that you should prepare for is, do you want to hand your 21-year-old child $500,000? Just hand it to them. What would they do with it? Okay? I know if I was 21 and, look, maybe I'd buy a car. Maybe I'd buy a house. Maybe I'd buy stuff. You know, when people win the lottery or they win a lot at a casino, they spend that money almost instantly. It's just human nature. Well, this is found money. But all of a sudden you wake up and you're 31, and where did it all go? And what did I do? Did it all go to taxes? Did it go to that? So it's something you want to prepare for when you're doing your will and your planning. Is, okay, I'm going to leave this money, but am I just going to give it to him in a lump sum? And then what happens? Where's the planning? This is when real planning has to be done, and you have to be careful. Now, one of the things you have to watch out for is taxation. So, if you left it in an IRA, they'll have to take that money over 10 years, and they'll get taxed on distributions. So if you spread it out right and you do an inherited IRA correctly, and we like to use annuities that have a 10-year payout that comply with the IRS, and here you go, over 10 years. Now it could be paid out monthly or it could be paid out annually, but here's your 10 years. Bump, 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 bump. This way you're not going to get taxed all at once. So if you were left at $500,000, you may get hit with ordinary income tax. If, let's say, I take that $500,000 and it's an IRA and I'm 21 years old, well, right away, Uncle Sam said you made $500,000 plus whatever else you made. So if you made $100,000, you inherited $500,000. All of a sudden, you say, "Oh, I'm going to take the money and do something with it." Well, you now have made $600,000, and you're going to be taxed at a 40% tax bracket, not a 23% tax bracket on all your money, not just the inherited money, but the other money. And then what you're left with is far less money. So that $500,000 becomes, if I'm taxed at 40%, could be, 40% of 500 is 200. So I'd be left with $300,000. So, and if I didn't pay the tax on it, and I went out and bought a $500,000 house with it, well, you got a lot of taxes to come up with at the end of the year. So how are you going to pay those taxes? You're going to sell your house to pay the tax? That's number one. Number two is, in this situation I'm in, all these grandchildren are inheriting lump sums of money, not just IRA, but regular money. And by contract, it goes directly to them, but the estate may have a tax. It might have a big tax. So if it's over a certain threshold, it could be a 40% tax on it, and it could be, if the documents are not listed right, the government can claw back and take some of that money, not just the regular income tax money, but the estate tax can be clawed back. So don't go spending it right away, and you really need to plan this out. It's not a 1, 2, 3. Oh, I got the money, great. I got my handout, great. I got student loans, great. Paid off, boom, bam, boom. You got to be very, very careful with your money, and somebody sensible in your life has to let you know that, hey, I know what the future looks like, or I've seen it, and you spend all this money now, you won't have any later. And I can't tell you how many lottery winners go bankrupt in 5 years, or how many athletes have gone bankrupt. And you say, how could that be? Such successful career, because they get large sums of money up front and they don't plan it out. And of course, it's wonderful. Oh, I got this big lump sum check. I want to buy that golden ring. You know, I want to, you know, this is found money. Well, yeah, it is, but it comes with strings attached. So planning is very important. Understand, though, that life insurance proceeds and annuity proceeds go by contract, not by will, not by trust. They go by beneficiary on that physical contract. So that's one of the lessons. And if you're in that situation, whether you're a parent or a grandchild, please give us a call. Let us go through it with you and make sure paperwork's done right. You know, you have the IRS. And if you don't do the transfers correctly, if you take the money and then try and buy something, it doesn't work. You have to do it by transfer so the government doesn't get their hands on it first. It's very interesting, and there's multiple taxes, just not income taxes. The income taxes, though, are ordinary income taxes. Now, if it's an annuity and it was not an IRA, but it was just a regular annuity, you have to pay tax on the gain of that annuity within 9 months. So if they've had it a long time, there might be a big tax there that you need to be, as a beneficiary, aware of, the income tax. Or they do have companies that you could do a non-qualified kind of stretch where you can where the IRS will let you take out a little bit of money, but the tax will be very minimalized because the gain will be passed along over the lifetime of your payments. So there's a real good tax strategies there. And finally, the other tax strategy that I mentioned before in the beginning of the show, if you were listening at the beginning, I know sometimes I like to bring things back from the beginning because I run by a lot of different concepts. If you have money accumulated inside a life insurance contract or an annuity, and we're seeing a lot of this now with annuities, and you can transfer that money into a long-term care annuity without paying taxes, the benefit can come out tax-free, and you can avoid a lot of the taxes down the road. So there's some really cool tax moves you can make. And why do we make tax moves? Because quite candidly, taxes take a portion of what we earned or perceived earned and make it like we have a lot less money. So those are my overriding messages today. And my recap is about distributing and planning. So just because you're 20, just because you're 30, just because you're 40, just because you're 70, just because you're 80, there's no age limit on planning. And because things change on a consistent basis, You have tax laws changing. You have products that are changing. You need to be up to date and review everything that you have, or if you're inheriting, everything that you're inheriting, and know how to inherit right and live great. You're listening to the Main Street Code for Financial Success. I'm your host, Neil Himmelstein here. I'm here every Friday at 3. Best way to reach me is 631-647-4694. Thank you, and have a wonderful day.
The views and opinions expressed on this program are not necessarily those of this station, JVC Broadcasting Management, or its sponsors.